Welcome. Let's take a look now at some individual charts and some technical analysis around some of the big charts that clients are following at the moment. And of course, one of the big themes is what's going on with central banks. And it certainly seems like the Bank of England is happy raising interest rates, as indeed, of course, as we know, also the European Central Bank. Some suggestions the Fed's beginning to take its foot off the pedal a little bit, and the possibility that we could well see a pause a little bit later on in the year in US interest rate rises. Now, this is giving us steer to all sorts of currency markets. But at the same time, of course, here in the UK, we have a situation where we've got record highs on the FTSE 100. And we've been asked a lot of questions by clients about just how to trade this market and how much further up it can go on what is at the moment an interesting trend. Let's introduce our guest. Now, for the next 15 minutes, it's Patricia Elbaz from Financial Trends. Welcome.
Hi, Jeremy.
As a trader of the market and someone that deals in technical analysis, these are interesting times. Fundamentally, there's some interesting underpinning of some of these markets. I know we're going to take a look at some of the big currency markets at the moment. What's your overarching thought?
So overall, we have seen sterling struggling. And what's interesting in the charts that we're going to see shortly is that there is a range. The range top is 124.50, 125. And even though sterling has been going down, we're still always going back up above the 120 pivotal level. So that's something which is quite significant for the medium term.
So you're buying above 120 but selling below? I mean, if it was to dip down again and confound us and go in the opposite direction, those that were long, of course, presumably would be stopped out. But if there's a short opportunity, would you want it to see much below 120 before taking a short position?
I think at the moment we're around 120, 140, so we have seen a bounce since. So if we do dip towards 121 to 120.80, I think that would be the time to put the stop at 120 and go for a long position then. Yes. Interestingly enough as well, moving averages, they're useful, but they are time lagging indicators. But I like to see when there's a crossover.
So what have you got on here? You've got the 200-day moving average and the 50.
We've got the 50 and 200. 50 and 200, they've crossed each other, which is a buy signal.
So the crosses when the 20 moves above the 200, that is, 50 moves above 200, that's a positive signal. Right. So is that a golden cross?
It is a golden cross, that's right. And when they're both moving on the upside, it's even a stronger signal. So the 50 above 200 when they're both heading higher. So interestingly enough, we have had that crossover. And the reason why I always say it's time lagging, because, you know, you get your buy signal here, but obviously we've dipped since 105. So it's been quite a long way off. But very, very significant that we have had the crossover. Watch for 120 being our floor for the time being and see if we can challenge the top of the range.
Let's stay with the charts because I wanted to move on to take a look at the next one, which is the same chart, but it's a lot more focused in. This is sterling dollar with candles, and you've drawn this nice parallel box that you've got here, lines with parallel lines on it.
Yes.
And what's this telling you?
So here, interestingly, Jeremy, I found 4 simultaneous reversal patterns. And I always think it's good to see when the candlesticks work, because obviously they don't always work, like everything. And in this case, you have 2 haramis and 2 bullish engulfing, which are highlighted there.
So what's a harami candle?
So a harami candle would be a candle within a candle. So no strong move on the upside or downside, and it's usually a pause. In this case, it can be a pause, a reversal. So we've had 2 reversals here. And the most recent one that we have here, which is just a few days ago, was the bullish engulfing. And again, that could show that there is a chance that we tackle the top of the range.
And this one on the far right-hand side, we were talking before we went into the interview that this is bearing out your point that you've got more potential upside than you have downside.
That's right. You're making a series of higher lows, but we haven't confirmed the higher highs, and that's what we're waiting in order to have the clear bullish signal. So we are within a range, undoubtedly, but there is a sign that it could be a positive move here.
Okay, let's move on to the next area of interest, which, as I said, is the European Central Bank raising interest rates. Same sort of pace that we've got against the sterling, the Bank of England and European Central Bank raising it 50 basis points. The Fed has pulled back. So the euro-dollar trade is interesting. That's the fundamental side of this. If we look at what we've got in terms of euro-dollar long-term chart, if we can bring this up and take a look at what we've got here, we've got the 250 period moving averages here on this again. But the euro's just trading over the 107 level
currently. Yes, so it is holding above. It just bounced off the support there, the 50-day moving average, if we can see, just touched on it. And we're currently around 107.70. So a little bit of an uptick here, not as strong as the one we saw in sterling dollar, but there is a chance that if we can regain 108, 110 could be our medium term. It's like the top of the range and the medium-term target.
So again, if you were to go long on this, stock goes how far down below where we are?
So I would look at 106.50 to 106.60 as the big support.
When we went into the interview, I was talking about some of the other aspects of the markets. And as I said, if you listed all the questions we were getting from clients, I guess the FTSE 100 record is probably up there with gold and the euro dollar. And it's this idea about where and how to trade markets that go into record levels, because you're then in pretty much uncharted territory, because you've got the trend in place. Some people think it's an opportunity to sell, but of course then they get caught short, they got caught wrong in the market, and they lose out. So we're looking here at a FTSE 100, and that question will be in amongst the questions I'm going to ask you, is how much higher it can go. But you've drawn a parallel channel here which has sort of disappeared up from where we are. How do you read where we are in the FTSE?
Yes, so as you say, we've got a parallel channel here. And the reason why I wanted to draw that is to show that since 2020, we've put in this channel. It was impulsive, and then we had a whole period in 2022 of range. So it was really within the range that we saw, 7,500, around 7,100 for a long time. And now we, as you say, historic highs at the moment, and there are still quite a lot of skeptics out there saying, are we getting towards the top? If we look at it here, there is no reason to call a top. 8,000 would be the big psychological
it's a nice round
level.
number. We're so close.
Yes, we are so close. We record highs, we're comfortably above 7,900, which was quite a significant level. So 8,000, and if we look at the range that we saw throughout 2022, if we have a range extension where you extend the whole level that you've seen, it actually gives us a target of 8,400.
Okay, so that then gets onto this question about how much further up a record market will go. So you use price extensions. What's the general rule about using price extensions? You talk here about the levels you're watching at on the FTSE 100. Is it always a doubling up of what you've seen in the past, or are there other metrics to use?
So I would use the low of the range, the top of the range, and extend that.
Right, okay.
The one thing which we have to watch out is the high of the range, which used to be our resistance, becomes our support level. So 7,750 to 7,700 would be the top of the range, which would be quite significant.
Okay.
So that would be, if you like, the base.
So where would you put your stop on that? Would you put your stop below that line of support, or would your stop be closer in? I guess it's partly to do with you're a day trader or a long-term
Yes,
trader.
long-term, that's right. So this stop for somebody who's trading it at the moment would be totally useless because it's so far away, and obviously they want to catch the next move. So if I was doing it for a longer term, I would certainly put it around there, 7,700. I think for the very short term, I would look to see, obviously when you've got a historic high, sometimes you get the historic highs and you get a little bit of correction after that. So I would like to see if 7,900 can be the initial support.
Okay, so 8,400 is your extension price target.
8,400. Let's see if we can get there.
Yeah, good. Okay, all right, fine. Let's move on and take a look at what else is happening in other markets. S&P 500. Got to take a look at this. This is another channel, but this is another upward facing. Not quite as steep as the FTSE was, but we're still within it.
Yes, and once again, I've put this channel, which I like to see. I always like to see how far you are from the midpoint. And in this case, we are sitting on the midpoint. So even though it is bullish, I wouldn't say it's impulsively bullish. So we're looking at 4,000 at the moment, 4,175 around there. So between 4,200 and 4,100 is going to be the big level. In terms of a strong move, the more we can hold above the midpoint, then we can be more bullish. So bullish, but not extensively bullish here.
And again, same question about the stop loss. How far down do you go? Do you use that midpoint center line as your support line? And would it be below there, or would you have your stop further on down?
Yeah, I think I would put it around 4,100 initially, to be quite close.
Okay, so all these markets looking pretty positive. The final chart we're going to bring up is that of gold. And that again has got a channel, but we've broken on the downside, which would seem to me to inject a bit of negativity into the discussion. But please correct me if I'm wrong.
Yes, so totally. You've got nice channel going up, and we're looking at it from throughout November, December, beginning of January, and more recently we have had a move down. It was 1945. So at the moment we are looking for a formation of an inverted hammer, and that's shown just over here, the one you're highlighting here. That's exactly it. Mm-hmm. And what does it show? It shows that there is a potential for a bounce here. So the reason why I'm not saying comfortably we're going back to 1975, 2000 is because we have seen quite a down move, and it is more likely to be an uptick towards 1900, 1925, but not a definite rally from here.
But nonetheless, it is a long trade for those that are nimble and in and out of the markets quickly.
Yes.
You're happy that this little bit of an uptick is likely to continue rather than fall further.
Totally. And also we always know that gold is, you know, the safe haven. When there's bad news, then of course it's going to be supported by that. But there has also been news coming out saying that things could actually look better than expected. It's actually also good sometimes to look at what's happening apart from the charts. But price-wise, there is a chance that we have more of an uptick, not a huge rally though.
Lovely. Patricia, we'll leave it there, but thanks for joining us.
Thank you, Jeremy.
Thanks indeed for your time. Patricia Elbaz, independent technical analyst, and from Financial Trends with us there with some of the charts of interest as we see a continuation of this uptick in some of these big global markets.